This is the start of a five video series, of which there'll be more series. But this series is just 5 videos. We're covering the basics of trading. If you're a new trader and you need to figure this shit out, or if you're an existing trader and you need to get back to the basics, this is what this video is for. So today's video is going to be all about higher highs, higher lows versus lower highs and lower lows. We're also going to cover risk management, trading 3 days a week, macro environment, and scanning for opportunities. But today is just about higher highs, higher lows. It is not very stimulating, but this is the stuff that you need to have figured out if you want to have any direction in what you were doing. So, higher highs, higher lows. I mean, it's straightforward. I've been doing this for a long time, so just saying this stuff out loud and drawing it feels silly. Um, but some people might need it. So you have price. This is the beginning of time. Your price goes up, down, up, down, up, down, up, down. You have a high, a low, a high that was higher than the previous high, a low that was higher than the previous low, and so on and so forth. Higher highs, higher lows, lower highs, highs, lower lows. Yeah, sorry, getting carried away. Lower highs, lower lows would, if we're just gonna continue off of this, some time went by. Now we have a high, put in a low. Nope, don't do that. Put in a low, put in another high, put in another low. Made a big low, high, another big low, high, low. You get the idea. We have a high here. This high is lower than this high. And this low is lower than this low. And it just keeps doing that. That's a trend. That's a downtrend. This was an uptrend. And this is how you figure out what the trend in the market is. You know, people say stuff like trend is your friend, follow the trend, trade the trend. Well, what is the trend? You can use a tool like 21-day moving average. I have that on my charts as the only indicator I have on my charts at the moment. Um, but really, higher highs, higher lows, up equals an uptrend, and lower highs and lower lows is a downtrend. Where people can get confused easily is during the times when the market shifts, where it transitions from being in an uptrend towards a downtrend. Uh, this period, which I didn't try drawing that because that takes some nuance. You gotta that we're gonna get into that here, but it gets more complicated. But in general, people get confused during the transition period, or trend shifts, trend changes, things get volatile and wacky. People also get confused when they are looking at a bunch of different time frames or different time spans. So time frames is like each point on your chart equals a day, 4 hour, 1 hour. But you also have to look at, like, if you're using a day data point, you have to look at enough data points. So, you know, you mean like 3 months or a month. Um, yeah. People can contest that, but they're doing something different. And I'm trying to get back to the basics, and this is it. We're talking about, this is a line chart. We're not worried about candlesticks. We're just looking at the highs and lows. And it's easy to get confused about what the trend is, because the trend on the 4 hour chart might say that we're in an uptrend, but the weekly chart says that we're in a downtrend and that we've been in a downtrend for the past 5 years. But the 4 hour chart says that we're in an uptrend. Um, it's very easy for the weekly chart to look like that and the 4 hour chart to look like that. So I'm trying to remember. Wait, I got the curriculum written down here. We'll get into that lesson 5, scanning for opportunities. And if I don't, then I'll add another video to this series. But in general, it really is as simple as higher highs, higher lows is an uptrend, lower highs, lower lows is a downtrend. And you'll just see that with time. For this video series, I'm going to stay in this whiteboard environment. We're not going to look at any real charts, but I'm going to do 2 videos a week. One's a macro environment, kind of where what's going on with the charts, looking for opportunities, seeing where we might want to put our attention. And the other one is, what was the other one going to be? Man, maybe it was macro ongoings. That wasn't the word, but that's the gist of it. And the other one was scanning for opportunities. So these are going to be 2 different segments of the channel. I'm going to have a video series. This is one of many video series. Um, so this is one of many video series, but that the video series is going to be one aspect of the channel. We're going to have a weekly macro, see what's going on in the world, and then we're going to have scanning for opportunities, where we look at individual equities primarily, because in the macro we'll look at the indices and what's going on in the commodities, and maybe we'll even look at the crazy crypto sphere every once in a while, just to check up on it. But then in the scanning for opportunities, I'm primarily interested in trading and investing in individual equities. So that's what we're going to be looking at there. And in these 2 segments, we will be looking at charts. And in those charts, you will see in practice what I am trying to tell you during these lessons. I tried breaking down these concepts, going back and forth between the whiteboard and real charts, like the Apple chart or Tesla chart, but I personally get distracted and carried away and go on tangents. So I'm just trying to give you the concepts and the ideas and do that as clearly as possible here, and then we will get into the how that actually looks in the real world. Okay, you can't see me waving my hands around behind the iPad, but a lot of that's going on. Anyways, higher highs, higher lows, lower highs, lower lows, uptrend, downtrend. Now, this period, whatever you want to call it, so we have an uptrend, downtrend, and obviously we don't know what's going on here. Is that just a consolidation? Is that just a period where price is taking a break? Is the market just giving people some time to catch up? Or is it a pivot? And there's so many words. The part of the trading education space, what really gets messed up is everybody's talking about the same thing. Like none of this is that complicated, like until you get into like order flow and stuff, the stuff's pretty straightforward and we're all just gambling. It's just some people do it slightly more educated and with more risk management than others. Um, and that doesn't determine success either. I mean, it's a great game that we're playing. It's fun. That's why we're doing it. Also money. But I mean, you have other ways to make money. If you didn't want to do something fun, you could go be a doctor. Like I've met horribly dumb medical students, and they're doing great in med school. They're going to be doctors someday. Sorry, tangent. Okay, so we got uptrend, downtrend. Is this a consolidation or is this a pivot? So you don't know until you get confirmation, and confirmation would be like we got some random stuff going on here, and then here we got an uptrend. We're like, oh, maybe it was just a consolidation. It's going up. Oh no, it's going down. And then when this goes down here, like you have possible it was just a consolidation. Oh no, it's going back down. We don't know what's going on anymore. Going back up. That going back up fails. It goes down lower. To be very conservative, I would consider this a confirmation. What is going on? I don't want to enter text. Delete that. This would be confirmation, and if you're playing like being very conservative with this methodology, you would be looking for something like this to be your entry, or you could go down on the lower time frames to get an entry. Um, but we'll get into that later. So, to make it a little bit more clear, a consolidation can look like anything, but basically it's usually some form of price tightening. These just look like lines, but if you've stared at the chart a bunch, which you will if you watch the other videos that are coming up, um, you got a rising wedge or flag or whatever, you got a triangle, um, you got a rising wedge, got a falling wedge, got a triangle. I mean, I know they're all triangles, but that's just what people kind of call them. I don't worry about that too much. I just consider how it's consolidation. And sometimes it can be more wacky. Like you get that, like, I don't know, you can get anything, really. But a pivot, what you're looking for is less abstract. In practice, it still ends up being a bunch of squiggles and it is kind of abstract. Um, but you want it to fit a certain framework. to at least look like something. So pivot slash trend, change, shift, whatever you want to call it. Everybody's going to have different words from this for this. So you got a bunch of higher highs, then maybe it starts slowing down a little bit, starts getting tighter, and then there's a sell-off. Now this, like the ICT crowd calls this like a breaker, which I actually like that word, and you're going to hear me using it because it's just, I don't know, ICT is really good at marketing. So this breaker, I'm just highlighting stuff because it's fun, is that's just shorthand for break of market structure. And break of market structure meaning that we were in an uptrend, that market structure was signaling an uptrend, and all of a sudden something changed. That structure got broken. It was a pretty perfect structure. Now it's broken. Now, not every break of structure is a pivot, or so you can't just jump into it usually. You, if you're on the lower time frames, maybe you can, but even still, I mean, I'm getting ahead of myself. Um, this is a break of structure. This could still end up being a consolidation, in this we could have lower lows and lower highs, but it's not a true downtrend. It just kind of ends up being a pause, something like this flag, and then it starts going back up again. But, if this were to be following the straightforward idea, you got the break of structure, got a lower low, we have a lower high, and then it resuming back below to make another lower low. So you have two lower lows, is what I would consider confirmation. And then this lower high, we don't know. I mean, we know price goes up and down, so it formed a low here and it's starting to go up. We don't know where that's going to stop. It could stop anywhere here and still uh, fall in line with our thesis that we're now in a downtrend. But that's where you can just take a bet at any moment in time. You can have some reasoning on lower time frames for your entry, which is what I like to do. Either way, with this second lower low, we have confirmation of this shift. Now, I'm trying to think. So the same thing is true in reverse. Uh, we have a downtrend. We got this low, and all of a sudden it gets bought up, and now this is a break of market structure. Bombs? That's not how you spell bombs, though. So we had a lower high, lower low, lower high, lower low, and all of a sudden we had a higher high. And then we had a higher low. And then we got confirmation when price went back up above this higher high, because I mean it went above it, so it doesn't matter where it's going to stop. It's going to be higher than this one, and the second higher high is our confirmation of this pivot, whereas here, our second lower low was confirmation of the pivot. Sorry, it's just letting my dog out. Um, Now, that's the theory, right? As I said before, things can get more complicated in reality, because if it was that easy, we'd all be rich. It's my thought bubble. Actually, it doesn't look too bad. One thing that I really like to look out for and to keep in mind is the formation of, um, Wyckoff calls them like springs, I think. Stop runs. I mean, that's what I think is the most not convoluted way of discussing it. Is a run on liquidity, the ICT thing, stop run, however you want to call it. And um, I'm gonna try my best, guys. Higher high. This is a higher low, higher high, higher low, higher high, higher low, higher high, higher low. All of a sudden, we have a lower high, and we have a lower low. Where I find these pivots to be the most concrete or predictive is, so like right here, you have your breaker. Break of market structure. So that's important. Oh, we're keeping an eye on that. We're marking it on our charts because that's some important shit. So you think that this is going to be, all of a sudden this next high is going to be lower, but it's actually a higher high. But instead of marking this as a higher high, I'm going to mark it as a stop run. And maybe I'll even put a question mark there. And that's for that part particularly. I wonder if I get another color in here. Nope. Yeah, that's another color. I like that. So I don't really know how to describe it. I mean, the markets move towards liquidity. Like the market's always trying to be correct, but there's people on both sides of it. So to be the most correct possible, price goes to where the most people are. Um, and we can get into that more. Sorry, closing a squeaky door. We can get into that more in a different video series, probably. I'm trying to keep things simple. Um, but basically, you got higher highs, higher lows, you got break of market structure, you have confirmation of the break of market structure, signals a shift from an uptrend to a downtrend or vice versa. And what I'm the maximum complexity I'm trying to add to this first video is this idea of a stop run, because you'll see me talk about it in the scanning for opportunities video, for the macro environment video. Um, I'm totally okay with price that does end up shifting from an uptrend straight into a downtrend like this, but what I look for is typically this stop run. And you will understand why more with time. Um, Again, I'm trying to keep things as simple as possible. It's so easy to just lay on the complexity, and somebody that's been trading for 2 years will understand what I'm trying to say if I were to continue on with my explanation. But, again, this is supposed to be entry level, back to the basics. So, what do we have so far? We have higher highs, higher lows. We're making mountains, that type of thing. We can have a downtrend on the weekly while the 4 hour or is a uptrend. We, that's totally possible. It's very common, and that's why most people get confused. But it's also a great way where if you can balance those things and keep track of them in your brain, it's a great way to get entries. We have consolidations as an option for what price is doing. Price is either in an uptrend, a downtrend, a consolidation, or a pivot, or a trend change. Um, and these two things, a consolidation doesn't necessarily mean that the trend continues, but it's just what we call when price is moving not in a clear uptrend or downtrend, while it also cannot be confirmed as a pivot. So a consolidation can be a pivot. I guess a pivot can be, I'm confusing myself. Anyways, we have consolidation. Price is just moving around seemingly randomly, but it's seeking out liquidity, trying to figure out where it wants to go next. Pivot, trend change, break of market structure. If you're in an uptrend, a lower low signifies the break of market structure, which is like this lower low relative to this one. But you don't have to, but I draw a horizontal line on the chart to keep track of them, and then confirmation of this trend change is with an additional lower low. Same thing going the other way. And then where we're going to stop the video right now, because I'm rambling too much, is this stop run idea. And this is just planting the seed for you that price wants to find liquidity. You have, uh, we'll do, I'm gonna make a different, so what was that other abstract thing I was talking about? I don't know. We can do, I hate the word fractal. Multi-time frame. And the markets as a liquidity seeking. This is not what machine. This is not what the videos are going to be called, but I'm just trying to take notes so I remember what to tell you guys about. But yeah, I don't know. This is how price moves. It seems silly, like, right? I have 1, two, three, four drawings here, and that's how the markets move. It really is. Yeah, there's more to it than that, but you have to just, I mean, you don't even have to take it for granted. Like you see it in the charts. I'll show it to you. Sunday, I think, is when we're doing the next video. But that's it for now. I know it just sounds crazy if you don't know anything about it, but uh, it will make sense, and it does make sense. You just don't know. And if you have been trading for a couple years and you think this shit sounds crazy, then you probably want to find something else to do. Um, I'll stop there. Have a good